know Coinsilium very well. Could you sum up the company and tell me exactly what it is that you do?
Yeah, sure. So we started as an incubator in the space of digital currencies, and the initial idea was to build and contribute to the build-up of the ecosystem around digital currencies. And we came to London in 2014. Initially, I was based in Hong Kong. Came to London in 2014 to list Coinsilium on a public market. And we did that in December 2015 when our shares started to be traded on NEX exchange. The whole idea, instead of just investing passively in digital currencies, was to invest in the companies that make applications of digital currencies and applications of blockchain possible.
How have things changed? That was 2015. Have things moved on since then?
Oh yes, a lot. So first of all, the whole market has expanded, and actually a lot of that expansion happened this year with a huge number of new investors and a huge number of new entrepreneurs coming and creating new companies in this space. At the same time, large institutions, banks and insurance companies who were at the time kind of disregarding Bitcoin and digital currency as maybe a worthless competition, actually started looking at the technology itself, blockchain, and they realized they could save a lot of money. It could make a lot of processes cost efficient, and they realized that it's something they should look at and start experimenting with. So we got an institutional interest in the space, and at the same time a retail interest in the space, new investors coming in, and interested in the long-term impact of blockchain and digital currencies.
How many players are there actually in the market now?
Well, in London it's basically us, Coinsilium, and the Crypto, which is a fund investing in tokens for new token issued by blockchain companies. As an incubator now, I would say 1,000 to 2,000 businesses that could be interesting to look at. Of course,
1 to 2,000 businesses. That's a lot.
Yeah. I mean, we invest globally. We don't limit our investment geographically. So our latest investments were in Israel and Singapore. We have invested in the US. We have invested in UK, in European countries, in Hong Kong. So it's a global market. So that's why it's quite large. But of course, we are very selective. We do our due diligence, and we have daily a lot of companies and entrepreneurs contacting us as well.
So to take you back a little bit, what exactly is blockchain and how does it work?
So the initial idea behind blockchain is that if you have any kind of digital asset, let's say pre-Bitcoin, if you had any digital asset and you try to assign a value to a digital asset, the problem is, as any picture you may have on your phone, anyone can duplicate it, right? So if you send me a picture, I can send it to 10 people, 50 people, right? So the same thing with digital coin. In essence, you needed a system to make sure that only one person at a time can hold this coin. Only one person at a time can send this coin to someone else. If you don't have that, then there is no value. So the idea was to create a ledger which would be replicated around people you don't know, nodes, and this ledger would have all the transactions between different people, different wallets, of something of value, a digital value. Now, when you look at it, you feel, well, that's a natural evolution of money, because the credit card and even the payment system, what we call the SWIFT system that we use now, is basically us sending a message to a bank saying, please do this transaction for us. That's all what it is. But with Bitcoin, you actually own the Bitcoin. You have a key that enables you to send the Bitcoin to someone else. So it's much more private, it's much more personal, and you don't go through an intermediary. So in 2008, when there was this financial crisis, if you remember, the blackmail by a lot of banks was, well, if we fail, the payment system failed, right? And with Bitcoin, that's not the case anymore, which means large financial institutions would say, okay, we did something wrong, we lost too much money, we cannot ensure that the payment system works. Well, now it can work. We're using internet, we're using cryptography, we're using blockchain.
Are the banks actually interested in this as a technology, or do they find it too challenging?
No, so the banks are looking at it on two different levels. If they look at Bitcoin, they usually don't like it because it's kind of a non-bank competition. You can go around the banks by sending value across the internet all over the world. So that's not really something they appreciate. But on blockchain, they like the fact that you have this database which is actually maintained by many other players, not necessarily themselves, and is extremely powerful. So to put into context, if you take all the supercomputers of the world and you multiply their power by 10,000s of times, you still don't get the power of Bitcoin. So the network, the Bitcoin power is a huge, the power that basically is needed to do the computations for Bitcoin is a huge, is the largest network on the planet. They're also looking at what we call private blockchain, which is a bit what the intranet is to the internet, where they don't need Bitcoin, they don't need a public blockchain. They will do their own blockchain, their own timestamp, tamper-proof internal blockchain, choosing which nodes can be or not be on the blockchain, and they will do the same system of a ledger shared by different operators. And it's a very good way to be, for example, create interoperability between different players. So now when you settle a transaction, for example, when you sell shares, you need 2 days to settle a transaction because it goes through a clearinghouse. In the future, if they use blockchain, this can be instantaneously settled.
How does Coinsilium make its money? That's a very good question, isn't it? How do you make your money?
So initially, the way we make our money is because we invest very early stage. So we don't invest a lot of money. We invest between $50 to $250,000 or euros. And after a certain period of time, we want to sell our stakes. So it's a very traditional early stage investor, right? But now what's going on is that because we have started this very early, we started in 2013 when most of the players came in last year. Our expertise is being recognized, so a lot of companies are asking our services for consulting advisory. So although our revenue initially has not been huge because we were mainly an investing company, now we see a lot of requests for advisory services. And of course we continue to invest in companies and hope that they grow and we can sell our stake at a very good profit.
So you've got a variety of revenue streams now?
Yes, now we have yes, we do.
Okay, and give me an example of an exit that you've made successfully.
So in 2015, we invested in a company called Satoshi Pay, which was building a platform for micropayments. Initially, they were using Bitcoin, now they use another form of digital currency. And actually, they got an investment. We introduced them to an AIM-listed company, and then they also got investment from another AIM-listed company. And they asked us at some point earlier this year if we wanted to sell our stake. And we had a substantial stake, we had 14.5%, and we sold that 3.6 times what we paid for it a couple of years ago or less. So it shows the speed of the pace of this, the evolution of this ecosystem, and also the fact that many people are interested to go early in these companies.
I learned in this presentation this evening that in October there may be 200 token sales, which seems an incredible amount.
This month.
This month?
Yes.
And I presume that you do advisory work on these token launches. Yes. So tell me how tokens work.
So what happens is that in the world of investment and investing in startups, a lot of these companies are using what we call open source model or decentralized applications, which means that for traditional investors, it's not easy to see where is the value. Because if your platform is open source, traditional investors will say, who owns the IP? How will I make money? And sometimes it's not so clear for them. So what happens is, because there are not so many investors understanding this space, then they have to turn to another way. And what they do is they want to tap into retail investors. But instead of doing crowdfunding, they realize that they could just sell a new token that they created.
So tokens are a form of crowdfunding?
Yes, they are. And what they do is this token will give you access to the platform. Now the token is not a share. The token doesn't give you any right as a token holder on the company assets or on the governance of the company, no voting rights, but you will be able to access the platform, or of course you'll be able to sell the token on a secondary market, which is usually called a crypto exchange, and there are tens, hundreds around the world. And what we have seen so far is that because the value of this token has appreciated so much on some cases, then the token buyers are becoming very there is a growing demand, and they say, oh, we want to start buying these tokens because first, maybe we want to support that project, maybe we want to be a part of the project, or also we just want to make money by selling the token later. It's a very liquid type of fundraising because you can issue a token and it's going to be traded on exchange a couple of weeks later. So it's very quick. So token buyers like that.
Some of these companies have actually gone up in value quite remarkably.
Yes. So the most remarkable has been Ether, which issued their first tokens in 2014 for maybe 30 cents, and it's worth $300 today.
And Ether is a major player now.
Ether is a major player because most of the token issuance is done through a smart contract. So the way it works is that you send Ether to the smart contract, and the smart contract at a certain point in time will issue a certain number of tokens to the same wallet. And this is enabled by the processing that is being done by the smart contract. Now,
are smart contracts, do they only work on an Ether platform, or do you give out smart contracts on all platforms?
So right now, the other platform that does smart contracts is a company we invested in as a first seed investor called RSK, and it's completely compatible with Ethereum. You can use the same language to program it. The only difference is, first of all, is right now it's a test net, but when it will go mainnet, hopefully soon, it will be cheaper to do it, and they're improving the tech a bit. And at the same time, instead of being validated by the Ethereum blockchain, it's validated by the Bitcoin blockchain, which is the largest one, the most resilient in a way. And it's the one that has been here for the longest time, since early 2009. So it's a proven technology. But of course, Ethereum has a kind of an advance in the sense that many developers program on Ethereum already. But as I said, RSK smart contracts can be written in the same language. So we hope to see a transition there, and also we hope to see token offerings on that platform as well.
And if you could give me a definition of smart contracts, please.
Well, smart contracts is basically, a smart contract is a piece of code, it's a program. Now, think about a vending machine. A vending machine, you put a coin and there is a can of soda that comes out. Smart contract is the same way as a computer program. So you put an input, the input can be a price, can be a certain type of value, it can be a data. And there is a process, a very logical process, obviously it's programmed, and at the end there will be an output. Now the output may happen straight away, or it may happen in 6 months or 1 year, whatever it's programmed into the smart contract. So for example, you can do an escrow. If you send 1 Ether to an escrow smart contract, and the deal is the escrow will be open when a certain transaction happens, then that's a smart contract basically. Or a certain time stamp, that's a smart contract. The blockchains work in terms of number of blocks, and basically that's how it works.
Where should if you were to give some advice to the private retail investor, where should they be putting their money right now to get a return?
Well, as I said earlier, there are not many options in terms of listed vehicles. So we feel that that's the reason why we came on the market in London, is because it makes the whole sector more legitimate. You know, we came in early, 2015, and we had to, everywhere we went, we had to explain first what is Bitcoin, what is blockchain, you know, and then we eventually start talking about Coinsilium. So we have in this education process. So I would say there are not so many options. So obviously I would say they can buy Coinsilium shares to be exposed to a portfolio of assets and equity stakes in these companies, or there are other listed companies that they can look at. If they want to go into tokens, it's possible, of course, but first of all, they need to know how to handle tokens. So for example, security. It's not a bank. You cannot call anyone saying, oh, somebody's using my credit card, right? It doesn't work that way. It's all personal. So you have to keep your private key extremely private and extremely safe.
Would you recommend people invest in tokens?
If they understand the proposition of the token, yes. But the problem is, tokens are spending a lot of money on marketing, you know, so it's becoming difficult to discern.
It's not for widows and orphans.
No.
You've got to really know what you're doing.
Yeah, exactly. That's why I think there are vehicles now like us, and possibly more coming to help them that.
Much safer.
Yes.
Great. Eddy Travia, CEO, thank you very much indeed.